All right. Welcome to another trade walkthrough video. This time it is an Ethereum trade. So as you can see, the long position. We'll hide that for a second, and I will take you through what has happened through the week and what I did yesterday. Okay, two things. I'll be quick today. So any of you who's joined for the first time, this is just an Ethereum long idea review from my side, not an idea. I have actually taken this trade. So let's go over the Ethereum market since the 16th of July. So we form a range, right? 16, 17 is pretty much evident that this is a range. Previous week, it breaks out. Okay. Breaks out, stays above that. Then, right before the weekly open on Sunday, it actually drops towards the range low. Doesn't really go towards the range low, but goes in there, baits the sellers, and also anybody who's long in there is pretty much stopped out. Okay. Now, what it does after that makes a nice clean high. So those of you who do not trade for a weekend have come fresh upon the weekly open, and I've looked at this pattern, and you know what? Market's going to go up. That's the first thing I would have said, and I am pretty sure a lot of people would have said the same thing. So I didn't really go immediately long. What I said to myself, right, since the market's doing that, I would wait for it to recover. And once it recovers above this range high, I'll buy any pullback into this zone, expect this low to hold, and target a range expansion. I did that and I failed. I lost the trade. So somewhere in there was my entry, and I took a market entry because, well, I saw a nice R here and I took that trade and got stopped out immediately. Not immediately, but few hours later. Where I actually failed, right? I did not fail at that trade. Yes, that trade went for a loss, but I didn't really fail there. What I actually failed is the adaptiveness, right? I couldn't adapt. So this was the weekly open, and this is a nice set of local lower highs and lower lows. Then we have a high, again local, right? And then we have a clean break in market structure. The high of the week is in. Off of the weekly open, the market's going down. Based on the Fibonacci strategy, it's a short. It's a net short, right? So the trade would have looked like this. Short anything above that high. Do not put your stop above or stop at that high. Give it a bit of a buffer and target that. Nice clean 2.4 hour. I didn't take that trade. That's how biased long I was this week, right? Forgot to even look at the market as a scalper. That's fine. Well, when I zoomed out, what I saw. So what did I see when I zoom out? So if you remember, I said here that Ethereum doesn't really look like a good long. Okay. One of the reasons was that it's taken out that key low and it has started to bounce. A lot of people would be attracted at this bounce because we are bouncing off of support level. People love to enter there, right? They love to enter anywhere in there and might have their stop somewhere in there. They're betting on the market to completely reverse to that side. In my opinion, as long as you don't get a break in market structure, that is not the right thing to do. Then if you look closely, Sunday, very interesting. Sunday we get a break of market structure on the daily. That's what I saw yesterday, and I was like, okay, I am buying this flush. Because from my previous video, what I actually did was, I said that since the market was there, I said that all opportunity is not lost. If the market pulls back to this low, I would buy, right? To this level, I would buy, and I would expect like this low to hold and target the range expansion. You can see Bitcoin didn't do that. It didn't give half the pullback that was expected. Ethereum did. Ethereum pretty much reset a lot of buyers yesterday, right? And I do not have a problem even if Ethereum goes down there. Where I would actually have a problem is when Ethereum starts to grind in this gray zone. Because I don't think the market is so forgiving and so, philanthropist that, I don't know if philanthropist is the correct word, but I don't think the market is so forgiving that it would come back to the support zone, tell everybody, oh, you can now buy, We have a break in market structure. We are going to go to the range I know. Either it completely reverses this flash crash and goes up, or it just completely goes down, breaks down, makes a lower low, which is when we are wrong. Okay, so I'm betting on the opposite. I am betting that the market would recover. So that's why I've gone long there. Could have entered a bit lower, but I realized this later on, the break in market structure part. And I'm expecting the market to not go below the bodies of these lows. An old technique of mine to cheap out, or rather cheat the stop loss. And that's about it for the Ethereum trade, right? This is my range low. This is my range high. Break of market structure, any flush down to the range low is a buy to me, which we did. Target is range high. End of story. That's it. We're trading the daily time frame now. Moving on to Bitcoin. How does the Bitcoin long look? By the way, you can verify this long from the previous stream or the previous video. I have taken this trade. Looks quite glorious, very beautiful. 3.2 hour I am up, but I am expecting double of that. Okay. So I'm expecting the market to at least cross 76k, might go up to 77-ish. Not beyond that. Beyond that would be a bit too much for the deviation part. Then it would become a range breakout, right? On the H4, you can see that we are actually going to have a break of market structure in an hour. If we do that, I would also be looking for a scalp long to target a high. That would be my second Bitcoin play. As far as Ethereum is concerned, the bounce is not half as good as compared to Bitcoin, but let's just leave it on its own. So that's it for Bitcoin, Ethereum. We are net long crypto. Let's go. And yeah, that's what I wanted to discuss. I just wanted to discuss this long setup on Ethereum and wanted to tell as to why I've gone long on Ethereum. It's a simple range play. That's it. Moving on to the interesting part, metals. A lot of people have been discussing metals around me lately. Yeah, they think it's over for metals or some sort of a correction is bound because the indexes are down too, right? The indexes have sold off quite a lot. That's a lot, right? That's a daily time frame, and you can see from the previous breakout, right? 70% or 65% of the breakout or gains have been reversed. That's a lot. S&P not that much. S&P is quite strong. I think it is the AI stocks that have been correcting. So since Nasdaq pretty much consists of tech stocks, the correction on Nasdaq is quite huge. Fine, indices are not our concern. Let's go back to gold and silver. So two things on gold, in my opinion. Firstly, nobody in the world can deny that that's a higher high. And high time frame higher highs do have a lot of value. Okay, that's a higher high. That's a high, low, high, low, high. So there's a very high probability that the market bounces off of this level. So look out for a bounce next week. Okay, or you could wait for a recovery above this gray zone. Once that happens, bang, we're going towards the high. That would be my assumption. Or else, it could be pretty simple. This is my resistance zone. Deviation. The market's coming back to the low. Everything depends how the market opens and trades next week. Okay, keep your mind open to both the scenarios. Okay, and obviously we'll be trading the intra-week fib chart, right? We won't be trading it like this. We would be trading it in these boundaries, whatever the boundaries be for the next week. A silver long that I took got stopped out yesterday, so I tried to be a little cheeky with silver, and I said to myself, you know what, we've come into support level. Okay, we are near the last month's low, so I decided to not pay much attention to my weekly fib strategy, which was a short. I'll tell you quickly why it was a short. So we know that clean break and hold below the last week's low prompts us to take a short to the 1.2x extension. In this case, it actually made another low and had another nice clean break and hold below the last week's low. So anybody would, in their right mind, would short this market, maybe above there, into the monthly open, right? And I expect the high of the week to hold, give it a bit of buffer. Now I'm not sure how much of a buffer I would have given it. right? But since the trade is 2.8 hour, I might have given it some buffer, right? Because a spike in something like that, 50-50. We didn't do that, so let's not go into the details of it, of what could have been. So that would have been the short based on the weekly fib strategy. But since this came in, and since we were into the high time frame support as we just saw, I bet on the opposite. So I went long. I went long at that low being taken, and expected the weekly low to be in and targeting the mid range or anything above there. Right, immediately upon filling, I got stopped out. Yeah, that's it. No more comments, no more justifying or reasoning. That was it. Got stopped out on a counter trend trade. Gold is on another level. It prints a nice clean short, completely reverses the trend, and then goes to the 1.2x extension. Crazy. Just one of the weeks with metals where if you just kept it simple, you could have made a lot of money. If you didn't, like I did, then you lost money, which I did as well. So that's it for the trades. I just wanted to have a look at metals, discuss the possibilities next week. And since the talks have now started to park, I'll leave you guys on a note that yes, we are long crypto, and let's go. Bye bye.